All right, today we're going to talk about life insurance sample quotations. Last few weeks we talked about different types of insurance and the mechanism of that insurance. Today, what I'm gonna do is that I'll compare instead of running the illustration together. I already ran the illustration. I'll show you that illustration and compare against one another. Okay. All right, these are what we have learned so far. There are term insurance, there are whole life insurance, there is universal life insurance. Term insurance is normally premium is lowest, but it has no cash value. It doesn't cover your lifetime. Instead, it covers you only during that term. It can be 10 years, 15 years, 20 years, 30 years. If you're young enough, there are companies who's doing 40 years also. But if you don't die within that time period, you probably lose the life insurance afterwards, or you have to pay a lot more to keep the policy. So this is for people who need a lifetime for a short period of time. Let's say you're starting up a family, you have a young children, and you want to make sure that your children are covered just in case something happen. And term insurance is cheapest way to purchase it. And a lot of times, what we can do with the term insurance is we can convert it into universal life or whole life later. So that's one thing that you have to look at. One thing that I wanted to talk about is that different type of life insurance. You do not have to have a one life insurance. You can have more than one life insurance. You can have two term life insurance. You can have one term and one IUL. I mean, however many you want, you can purchase more life insurance. And sometimes what I would recommend to young people is to purchase IUL for one thing and purchase term insurance also and combine it together. And if something happens, your family will have a bigger coverage, especially when you have young children. Okay. Whole life policy is just like term life. It covers, it has a set premium and it covers whole life. So the difference between whole term life and whole life is whole life covers, instead of term, they cover whole life. In order for whole life to cover your entire lifespan, they have something called cash value. Cash value is a savings account attached to the life insurance. So it is a set premium, everything's all guaranteed, and it is a lifetime coverage, and this is for people who want lifetime insurance. Universal life is somewhere between term life and universal life, a whole life, because it covers your lifetime, but the premium can be flexible. So people can pay more, pay less. They can skip a payment depending on the situation, and you can make a different change premium even after the policy is issued. So you have a lot more flexibility. It also has a cash value. It also offers lifetime coverage. This is for people who want more flexibility. And generally speaking, universal life has more competitive interest rates. So you have a cash value accumulation faster than whole life. And both whole life and universal life, you can use your cash value and you can access it without any tax consequence in the form of loan and in the form of withdrawals. So you do not have to report it to IRS of using of the cash value, and that's a very great thing to do, thing to have when you're doing lifetime financial planning. Okay, let's look at actual number. This is a term life insurance. It's for the male, age 49, age 45, and preferred non-tobacco person. So this is a very, this person is male at a good health. 10-year term, we're looking, and it is for a $1 million policy. 10-year term is only $73.48 a month. 15-year term is $96.36. 20-year term is $128.92, and 30-year term is $253, and ART is annual renewable term, which I'm not going to talk about a lot today, is a $52.36 to begin with, and every year the premium bumps up. Okay? Now, thing about term insurance is that if you look at the 10-year term, look at that. Premium is guaranteed for 10 years. And after 10 years, if this person wants to keep the policy, the annual premium went up to $6,541.92. And next year, it'll go up again. So it becomes annual renewable term. So after term, it's going to be very difficult to keep up with the payments. Same thing with the 15-year or 20 or 30-year term. After the term is over, you're going to, in order for you to keep the policies going even after the term, the premium will be very, very high. And for some companies, they don't even let you have a renewable term afterwards. So after 10 years, it's gone. You have to reapply, even if you have a health issue. Okay. So these are the term insurance rates. Now compare this to, come on, whole life policy. Whole life policy, same scenario. Male, age 45, prefer non-tobacco, $1 million of coverage, and the monthly premium we're looking $1,478.40, $1,478.40 a month. That's quite a bit. We're dealing with a big face amount, but still, that's a big premium. The life insurance is guaranteed for lifetime, and the cash value is guaranteed to be $1 million at age 99, but it could be more depending on how well insurance companies' interest rate is coming back. But it is guaranteed to be $1 million at maturity dates. Okay. Another one that I want you to look at is GUL, Guarantee Universal Life. This is a universal life in very special, specialized product. This is almost like a term insurance for lifetime, even more so than whole life, because you have a premium which is $790, which is a lot less than whole life. It's about what, little bit over 2 times a 30-year term, right? Same individuals, 45, prefer non-tobacco, $1 million policy, $790. That'll cover your life insurance for life. So it'll cover your total lifespan. And however, there's very little chance of cash value. You'll see the little bit of cash value at the beginning of the years, but later on you get zero cash value. Things unique about this GUL is a universal life. If your cash value is zero, you don't have death benefit. But GUL, their death benefit is guaranteed to last your lifetime, so you get $1 million even without cash value. So you're paying premium until age 100, so which is $790 a month, $9,480 a year. You have a lifetime life insurance coverage. Now, if you want to, or this is also true with the whole life, if you want to, you can have a limited pay. You can have 10 pay, 20 pay, 30 pay, however you want. You can pay up a little bit and pay only 20 years if it is a 20 pay. The premium will be higher, but you don't have to keep on making payment until you die. If it is a 20 pay, after 20 pay, you don't have to pay anything. Okay, but the life insurance is guaranteed for life. GUL. That's a GUL for you. The premium is very affordable. Now, here is another GUL. I kind of like this more than Columbus Life GUL. Premium is a little bit cheaper, same individual, $697.07, and it's got $1 million death benefit. The cash value, there is barely any cash value, worse than Columbus Life. However, if client has decided to cancel at 15th year, he get portion of his money back. Until 15th year, he put total premium that he had paid into is $125,475. And if he cancels at age 60, which is the 15th year, he will be getting $81,557 back from NECO. And obviously, policy will no longer be there, but he's getting portion of his money. I think it is the number is about 60% or something like that. Now, if you cancel at age 20, I mean not age 20, on 20th policy year, you get all your money. $167,300 is a cumulative premium that you paid into the policy. You got $3 less because of the service fee. $167,297 you get it back, and you no longer have a life insurance, but at least you got every bit of your premium paid into this policy. And another option is at 25th year, age 70 in this case, you get $209,000 back. So about $4 shy of what you have paid into. Total payment is $209,125. The return of premium will be $209,121. This is a very unique GUL product, and not that many company offers this, but this is a great alternative for term life insurance with return of premium rider. If anybody wants a return of premium rider, this might be something to think about. Okay, and it's almost like a savings account. And you got until age 20, until 20 years, you get lifetime coverage. If something happened, there's going to be $1 million paid out to the family. If not, he will walk out with $167,000, the total premium that he has paid into. Okay, that's a GUL for you. Now, this is a universal life, traditional universal life. So it has a guarantee side and non-guarantee side. Whenever you see guarantee in life insurance company, whether it is annuity or life insurance, if it says a guarantee, you have to think of the worst possible combination. Guarantee means worst possible interest rate. Guarantee also means the highest cost of insurance that Department of Insurance is allowing the company. And guarantee also means the highest cost of maintaining the policy fees and everything. All the garbage fee will be at the maximum that is written on the policy. So chance of any client hitting the guarantee side is very, very slim. But it is the law to show client what that guarantee means. If the guaranteed situation, the worst possible situation happens, what happens to the policy? In this particular scenario, the policy will last until age 84, which is 39 years. The premium is $1,140. So it's a little lesser than whole life policy. But whole life policy, the worst possible scenario is that you'll have a coverage until age 99. And the cash value is guaranteed to be $1 million, same as a death benefit. But unlike that, universal life do not have that guarantee. But non-guarantees is, we also call it a current assumption. The current interest rate with the current cost of insurance, current cost of maintaining the policy. More than likely, this is what's going to happen. You'll see the policy going. And I set that up so the policy will be enforced until age 120. the premium is a little cheaper. You get to have the same coverage, and probably you have a better rate of return on your cash value. This one is a universal life with a no lapse guarantee. Columbus Life is one of very few company that actually let you have universal life with no lapse guarantee rider, which means this. If you look at this guarantee side one more time, even if there's no cash value, you have a life insurance of 1 million. Until when? Until age 120. So 1 million is guaranteed no matter what. So that's a paid rider. So the premium will go a little higher, but not that much. It's $1,278.74. If you're going with a whole universal life with a guarantee, Columbus Life might be a good option. I mean, this will be very competitive against whole life policy. Okay. Another option obviously is famous IUL, Index Universal Life. Index Universal Life is one of the most popular life insurance policy in current situation because of this two thing. The minimum interest rate is 0% most of the time. So no matter what happens, it's not going to be anything below 0%. But the interest rate is tied to index, and the potential of getting higher interest rate is very high, and that's why your calculation shows a lot lower premium to keep the policy in place. So for instance, if we're doing minimum funding, so make sure that you have a policy until age 120 without any issue, assuming current rate of return. The premium only required premium is about $783.40. So this is a lot better, right? And you see this current assumption, and you got alternative assumption, and guarantee assumption is the policy will lapse at age 62, 63 right here. But once again, oh no, the policy will lapse at 66, no 65. But chance of you hitting the guarantee side is very, very slim. But we do have to disclose that if worst possible combination is happening, that's what you're going to get. But keep that in mind. If that happens, you can also always jump off from this product and go to somebody else's product. Okay. This is what you want to use your IUL for, unless you're focusing on death benefit. If you really want to, you can max fund your IUL. It's the same scenario, but you can set aside as much as $1,775.93. And if you keep that up for until age 65, you can take out $45,000 retirement income, and that's tax-free. I mean, you can also use this cash value anytime in between. Like on 7th year, you got $125,000 cash value, and you can access up to $115,000, and you can access it in the form of loan, policy loan, or withdrawals, and you don't have to pay tax on it. I think I forgot to mention, in all this life insurance product, your death benefit is tax-free. You don't have to worry about paying income tax on death benefit. Okay. So people love IUL because you have that flexibility. Even though I showed you minimum and maximum, client can go anywhere in between or even below. And even if they started with a minimum premium, if they want to, they can do the increase their premium all the way to max, or they can skip a payment if they need to. So their flexibility is always there. You can always go back and forth on the amounts. And that is also true with the Universal Life. Once again, Universal Life, when they first introduced Universal Life, it was called Flexible Premium Whole Life Policy. So it has a lot more flexibility than whole life policy, and we kind of like that. And IUL can be used as a death benefit. IUL can be used for college savings, because when you use a cash value on universal life, including IUL, you don't have to report the cash value to FAFSA application, financial aid application for college. And you can use it for retirement funding. You can use it for down payment on the house. You can use cash value to pay off your credit card. I'm telling you this because my sister-in-law actually did whatever I'm just telling you now. At the time when she was purchasing a life insurance from me, it was a VUL that was very popular. She purchased it. She used it when she was in college, and she put her money in there. And then when she got married, she used the cash value from that life insurance policy to use it as a down payment on the house. And she actually used that as when she came back from mission, long-term mission trip. She came back and she purchased a car with that cash value. I mean, the last thing that she used is that she said, "I have too much credit card debts, and I think I'm just gonna pay off my credit card instead of paying the high interest rate." So she actually pulled the money out and pay off her credit card. You can do that. That's why universal life should be called as a Swiss Army knife of life insurance or financial planning. I talk a lot of different life insurance products, so I thought that it would be a good idea for me to really put the other comparison. 10, 15, 20, 30-year term insurance, whole life, GUL, Columbus Life, GUL, Anico, Universal Life, Columbus Life, Universal Life from Columbus Life with a no lapse guarantee, IUL from National Life, that's the quotation with a minimum funding, IUL with a maximum funding, same IUL. Here are the premiums: 73, 96, 128, 253, 1478, 790, 697, 1140, 1278, 783, 1775. And cash value at 12th year, I mean, term insurance does not have any cash value. Whole life, you will have about $199,000. Keep that in mind, but you're making bigger payments. GUL at Columbus Life is about $17,000. GUL at Anico, there is no cash value. However, as I told you, it has a return on premium rider on it, so you can actually get your money back on 15th, 20th, and 25th year. Columbus Life, $117,000. Columbus Life with a no lapse guarantee, since premium is a little bit higher, cash value will be higher, $141,000. IUL with a minimum funding, lowest premium, $783. You got about $65,000. If you max fund it, we're looking at $257,000. And 20th year, $362,000, $11,000, no cash value, $249,000, $298,000, $166,000, and $582,000. You get this choice. Which is a good product? It all depends on the client's situation. It's our job to make an assessment. What would be the good product for them? A lot of times, my recommendation many times goes with IUL plus term insurance if they're short on money, because we want to make sure that you have a proper protection. Okay? I mean, we do have agents who love whole life, especially Japanese clients that we have. They love the guarantee side, so they still purchase whole life insurance. This morning somebody asked me, do they still purchase whole life insurance? I said, yeah, they still purchase whole life insurance. And keep that in mind, all this product that I have shown you today have living benefit. It has coverage for chronic illness, critical illness, and terminal illness. Chronic illness is that when you have when you need caregiver. When your health is so bad, you cannot do 2 out of 6 activities of daily living for more than 90 days on your own, you got chronic illness, which you get prepayment of your death benefit. Critical illness, as the name says it, if you have a critical illness like cancer, renal failure, things like that, you can actually get a prepayment on the death benefit. Terminal illness, if doctor said that your life is coming to an end, according to their medical professional opinions, less than 24 months or 12 months, depends on the company, then you can actually get a prepayment on the death benefit if you choose to do so. That ends my slides, so I'm gonna end the show right here.